Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 29th of April, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. 29th of April, May in 2 days, 3 days, Wednesday. Yeah, where has the month gone? Where's the year gone? So here we are, going in towards month end. We're going to go for our usual regular run through in here for a Monday, which is take a look at a slightly bigger picture of the setup for the week, the shape of the week, as I like to call it. So we'll take a look at what we've got coming up on both the micro and the macro calendar, the earnings calendar and the fundamentals calendar in here, economic fundamentals calendar for the week ahead. So give us an idea of the shape of the week. Why is it important? We're day trading at trade day. Why do we need to look at further ahead? Well, if we've got a lot of events and data and fundamental and earnings impacts coming up later in the week, then it's likely then that we are going to see maybe less volatility at the beginning of the week. And that's exactly what we got this week, actually. So that's why it's useful. Very very light calendar to start the week, very busy calendar as we get into the week. So that probably means today's going to be relatively quiet. You can see today already in here, we have some Eurozone data in here. A German CPI, the standout, we get that in about 30 minutes. Could have a slight impact on markets, but I doubt it. And then late tonight, we get Chinese PMI data coming through, both manufacturing and non-manufacturing. So we have that coming through later today. That's usually fairly important, can impact Asian markets. So watching out for that maybe later. But you can see nothing out in here from the US. If I go for the whole week in here, though, and you can see we've already had this state-run data in here out of Germany already. We've got the overall data for Germany. If we move into Tuesday, though, you can see further data in here, CPI data from France, German employment in here later, and then we get Eurozone CPI data. So a busy data on the European side are going into Tuesday. And then, but again, light on the US side, although we do get the CB consumer confidence. That can impact markets, but I don't think it's going to be a big mover of markets particularly. As we go into Wednesday, now remember, Wednesday's going to be a bit of a funny one in here because that's wrong on the United Kingdom holiday. The United Kingdom holiday is not till next Monday, but we do have, it's Labor Day. The 1st of May is Labor Day, globally tend to be. I know in the US, Labor Day is in September, first Monday in September, but the 1st of May is globally traditionally Labor Day. So you can see a lot of European markets and Asian markets are closed in here. So that could be interesting considering if we scroll down, we do get the ADP non-farm employment change, the precursor to the usual data that we get in here from the actual official data we get on Friday, but we also get then the PMI data we always get on the 1st of the month, but we're not getting that for a lot of these countries. It's been delayed though. Actually, the Chinese one we've got getting a bit early, we're getting today, which is actually tomorrow for them, so it's coming a day early, but we get the US data, but because of all those other markets are closed, we're not getting the data from Europe and some of the Asian countries. So in here, we get the ISM manufacturing data on the 1st of the month on Wednesday, and obviously critically, it's the Fed on Monday. Now remember, it's no dot plot chart on Wednesday, and also we don't get any, and we're not expecting a change, right? Clearly, no change expected, but it's going to be really interesting the press conference and afterwards, and also the statement to see how much they have moved. Okay, so we're obviously getting a good idea from all the comments that we saw over the last few weeks in here since we had that CPI data. And remember, Friday's PCE data was higher than expected as well. So all of that pointing towards the Fed certainly going to be on hold longer. And I actually got an article in here. There is one part of the interest rate future interest rate options market that's potentially pricing in a hike before we get a cut. What we look at, the CME, is not pricing in that, the futures, but we are seeing some potential for a rate hike rather than a cut. So, but we'll come to that shortly. But FOMC, Fed on Wednesday. So a busy day Wednesday, really. So we not only is European and Asian markets, many of those closed. So you could see a bit of gap in liquidity because those markets being closed in here. But we also get the data in here from the ISM manufacturing PMI data, and then we get the Fed on Wednesday. And then as we move into Thursday, then the PMI data plays catch up in Europe. So you can see in here the Eurozone data comes out then on Thursday. And then moving forward as well, if we go for the rest of the week in here, then we get the actual employment report on Friday, and then we get the non-manufacturing, the service sector PMI data out of the US, but you don't get that for the Eurozone. And I'm thinking we're going to get that then next Monday. So it's a busy week from about Wednesday onwards with PMI data plus European and Asian holidays for Labor Day on Wednesday, plus the Fed on Wednesday. And then further on Friday, we get further PMI data and obviously the all-important US employment report. So Wednesday through Friday, super busy on both US data front and on the European side, we get that holiday, which then punches right in on the Wednesday, the liquidity. So that could be interesting as well. And the other thing to note in here, going to the earnings calendar in here, so things do actually kick off a little bit earlier in here on the earnings calendar of note. Amazon on Tuesday, okay, and then where are we? Wednesday, well, MasterCard, Qualcomm, Pfizer, ADP, but those are not huge. And then if I zoom forward though to Thursday, Apple on Thursday. So 2 more of the Magnificent 7. Once we get those 2, remember we've had 4 of those already. We've got those 2 coming out as well. That'll be 6. And then the only other one we have is Nvidia, which is basically still another 3 to 4 weeks away towards the second half, late May. So those are going to be super important. So really from Tuesday night, we get Amazon, okay, after the bell. These big tech are always after the bell. Today, incidentally, nothing really of note. You can see these are not particularly big. For a start, NXP, Welltower, not particularly big releases in here that we're getting today. So big focus now. The first focus on the earnings side is going to be Amazon that we get in here after the bell on Tuesday. And then we run into that whole set of data and obviously the Fed on Wednesday night and that European holiday on Monday the 3rd. So a lot going on in here going through this week, but not very much today. Economic calendar on the earnings side light, and today's calendar in here that we looked at, if I go back to just today, you can see fairly light in here, nothing really of any note coming out of the US. So we're probably going to expect a relatively quiet day, I should imagine, going into today. Okay, so let's just run through what else is going on. Fed's power poised to keep US on higher for longer path. We know that. That's probably what's coming down the line. Nothing really significant in here that's going to really impact. European inflation rate set for sideways move, so that's coming up going into this week, as we've already covered. 5 things you need to start your day in here. So it's Fed decision week. Obviously, we know that. Few minutes ago, consensus calling for the rate cut cycle to be in May, and so now we're not obviously going to get that rate cut. So we're going to look. Also, the team thinks the Fed chair could endorse the recent upward moves in bond use practices as soon as this week. So what we might see in here, although the Fed's still teetering hawkish, remember bond rates are up. Okay, so longer term yields are up. So that could mean that the Fed can actually keep them slightly more to a dovish side in here, because the longer term interest rates are doing the Fed's job for them on the hawkish side. So then they may actually then cause them to maybe shift slightly to more dovish. So we'll have to wait and see on that one though. Futures are up this morning on the overnights so far. Tesla up 6% in pre-market. Musk went to an unannounced trip to China at the weekend. The yen is on the dollar yen surged higher. That's yen weakness. Then today broke up through. We've got a couple of articles on this. Broke up through 160. And it says like a local holiday. So I think it was Japanese holiday in here. If we just jump back, Japanese holiday. I think Japanese. It's a Japanese holiday today. So maybe markets taking. So we saw a big leap higher in dollar yen. That's yen weakness. That ongoing yen weakness that we've been seeing. A big leap higher. Actually took out. There was intervention potentially. We were looking for like 155, 156. Surged through there last week, and then up through 160 today. But there has been a significant reversal back below 160, and whether the Japanese, the Bank of Japan have intervened or not, we don't know. They haven't actually announced that they've intervened, but a lot of rumours that they have intervened in here to support the weakening Japanese yen in here. And why is it under pressure in here? Because of the difference between the US and Japanese interest rates, that differential in here. Japan in here, having moved away from zero interest rate policy, but then indicating they're not going any further. And the US, moving from a more dovish to a de facto more hawkish position. Okay, not going to hike rates, but we were expecting potentially lower rates, and we're not getting those. So hence the dollar is rallying against the Japanese yen. What else do I have for you in here? So earnings keep stocks aloft at start of week. Fed market wrap in here. US tech earnings last week. Remember, although we had a negative with Meta, we had a strong positive with Microsoft and Google, which surged higher in here. And then the other thing is in here, Japanese yen currency bounces back amid holiday thin trading. We've already discussed that. Wall Street week ahead, lofty US stocks leave investors punishing earning disappointments. Well, we did see that last week. Meta strong reports from Google and Microsoft, but we saw a big move down on Meta last week. What else do I have for you in here? Inflation wary US rate options. Oops, let me just zoom that back out again. Oops, why is that not? There we go. Options on secured overnight financing rate, the futures, are showing a higher probability that the Federal Reserve could hike interest rates a quarter percentage point this year and next as US inflation and labour. So one part of the futures market is pricing in a potential rate hike rather than a rate cut in here. So it's not, if I look at the CME tool, we're not seeing that at all. There's nothing over here at 550 to 575 anywhere along. If you go and look in here, we're not pricing in any kind of chance of a rate hike. But one part of the interest rate market is potentially pricing that in. Futures slightly up. Mega caps continuing to do well, having surged for the second half of last week on the back of those positive numbers, as we said there, from Alphabet / Google and Microsoft. Fed holding patterns, inflation delays approach to any soft landing. So again in here, all eyes on the Fed going into Wednesday. And there's the stuff on the yen. Yen surges sparked intervention talk after drop to 160 per dollar. So dollar yen went up through 160 and then came back down after that to like 155 on talks of intervention. But Japan opts to keep traders in dark on whether it intervened. Did it intervene or not? It went through 160 and then back down lower from there. Let's take a quick look at the overnights in here. Nikkei slightly up in here, 8/10, probably helped by the weakness in the yen there. Hang saying only 0.5%. Actually, I'm not sure whether that is the market's probably closed today, so that could just be data from Friday actually saying that. On the European side, we're slightly up on the FTSE, 0.5%, but the German DAX and the French CAC little changed on the overnights. And if we go to the US futures in here, having had those strong rally, 2% up we were on the NASDAQ on Friday, and the S&P adding 1% in here. If we go and look, we've extended those gains on the futures on the overnight. So we've got a couple of tenths up on the NASDAQ and are coming up to 2 tenths up on the S&P. Yields have actually backed off in here, having spiked to higher yields last week. We've actually seen a slight move lower. I've been flagging this as a potential to see stocks extend gains even further. If we can cut, I think this is an important to watch in here, 457 and then really these lows in here, 448 on 10-year yields. And if we go and look at the really important one here is 10-year on the prices, really it's ultimately here above on the bond market. If you want to flag this as an equity trader, watching out for these spikes in here, but the really critical one there, 108, where are we? 108.25 and a half. We do have some levels in front of that. I think if we come down here on the 10-year, 108.08. But really that 25 and a half is going to be the critical one. But up through 108.08 and then but critically 25 and a half. If we get through there, you could really see. So keeping that on the sideline, maybe mark an alert on that. 108.25 and a half on the US 10-year future. Above there, we'll see a base go in, a stronger base go in on the US 10-year future on price, meaning lower yields, and that could see an acceleration up in the equity indices. Equity indices maintaining their bullish bias. It looks to me, I think we've got a basing here, S&P building those upside pressures, and that strong rally that we saw on on Friday on the NASDAQ, reinforcing this basing pattern in here. And I do think these markets are going to go back up to their highs in here as we go into May. I think we need to get the Fed out the way and the US employment for, and also we've got obviously Amazon and Apple. But I think markets are heading back up to the highs of this year as we go into the first part of May is my bigger picture view, and staying bullish, but probably looking for more of a consolidation day today, but with some upside pressures on. I don't see it being a big extension day. I think think extension to the upside is probably going to be limited, but do see risk to the upside. So looking for upside gains. Watching those levels on the treasuries as well, watching the levels to spark potential, the Nasdaq and the S&P sparking through resistance levels in here that could trigger each other higher. But overall, not looking for us to add in, we had, let's say, 2%, 1% days in here on Nasdaq and S&P, not looking for anything like that. We're up a couple of tenths in here this morning. I don't think we're going to be probably 5 tenths, 6 tenths up at most today, but I do see it going up, but only slightly up today. I think there's a lot coming this week, so not expecting too many fireworks today, guys. Keep your powder dry for next week. Sorry, not next week, for the next few days. Kicking off really with the Amazon data that we get on Tuesday night Tuesday after the close, Tuesday early evening, and then going from there, we continue to see further, obviously, macro data and then Apple as well on Thursday. So an important week in here, a lot of macro fundamental data. We get the Fed as well. We get Amazon and Apple all reporting. So probably looking for more of the significant price action to come from the middle of the week onwards. And remember, Wednesday being that European holiday, could see some liquidity pockets, which could then see moves from Wednesday even more exaggerated than we might normally see. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. And we did launch, I meant to mention this. I don't know if you guys are seeing, we launched our Learn and Earn scheme in here, our reward scheme on Friday and then over the weekend. Please do take a look at that. You should see that on your dashboard. You can go and earn yourself potentially a free reset by giving reviews and going through the courses and etc. etc. Any questions on that, please do pop it into either Discord or probably best to pop it into a support ticket if you've got any questions. All right, guys, I'm going to wish you again a great trading day. Take care, stay safe, and I'll be back with you tomorrow. Bye.